rivers. Actually, they already did most of it. It's all turning to be a huge reservoir. They don't flow to the sea anymore. They closed everything. Well, problem. To make one sheet of paper takes you a liter of water. To make a kilo of sugar uses 100 liters. To make rice, 2,400 liters. To a kilo of chicken, 6,000 liters. A kilo of meat, 15. And to produce a car we love to drive, 1.2 million liters are spent. There's not enough out there. Power of the funds. Ignore them, you'll be in trouble. Why should you keep both eyes? Well, you know, people talk funds, but it's like funds. There are a lot of different types of, and they behave differently, and they impact the markets on a complete different manner. Basically, they started in year 2000. Today, 6 to 10% in commodities only. How much money would you guess they have invested? Usually I don't give handouts before, so that's where you make more money. But you know now already $260 billion is the estimate. But how much money you think they have, hedge funds alone, under their management? That's $2.4 trillion. Whoa, we are now talking big bucks. Okay. But how much money you guess the funds have in the financial markets? Just, you know, like a ballpark figure. Maybe not precise numbers, but just gives you idea of critical mass. That's 60 trillion. And look, wealth is growing. Trust me, wealth is growing, so there's more coming in. So flows of money, keep an eye on that. Oh, the dollar went stronger? Fine, there was one day the markets took a pounding just because the 20-year US Treasury notes were showing good signs of a buy. Huge amount of the portfolio went into it. They are actively managing portfolio. These portfolio managers are worth fortunes. You talk big bonus, you talk to these people. This is where it is. Well, how they play the markets. Guess what? Basically, there are 3 different types. First one, black box funds. You know what? They have no interest in fundamentals whatsoever. Oh, is bullish, bearish, is this up, down? Oh, they couldn't care less. They are pure technicals. They look at trends. They have incredible machines. They put their stuff in. It's a black box. No clue what it is. You go in there. They go long and short. And that's how they play. But then comes a second different type, which are the hedge funds. They look for a story. Ethanol is a story. Brazilian sugar was a story. Corn is a story. Wheat will be back then a big story. So they look for something. They use fundamentals to decide what a strategy is, and technicals to get in and get out. Different way, different impact. They will go long and short, but preferably long side players. Well, bad news. Oh, you know, all I need to do is just check out Black Box and I figure out what they do, and I talk to all these people, and then I go to the hedge funds and talk to them. Well, there are 8,000 of them. Right? And actually there is a huge turnover every year. A lot will not be there, back again. Last, the index funds. Well, they look for new homes. They have a lot of wealth coming in. You would not imagine what the Canadian Teachers of Canada Pension Fund is about. It's pretty serious stuff. It's huge money. They're a major investor on coal reserves in the US. That's very impacting. You know, they invest always in a long basket. They keep rolling their positions on and on. No technicals, no fundamentals, except on a very high macro level. What they look is 25, 50 years from now, how will I pay the pension fund to the Canadian teacher that started today and is already chipping in his money. 3 different ways that funds play. Whatever they are in makes a big difference. They go long term, of course. Well, open interest, total buys and sells of contracts. In corn, That's crazy from year 2000 now. Look at the curve. Soybean, same stuff. Wheat, same story. Sugar, up as well. Impressive on palm oil. Energy comes in. Things go wild. Palm was a dormant thing for many years. Boom. Crazy. And the prices go crazy. It's not open interest. Check-off gold. Minneapolis wheat. Soybean oil. Soybeans. Palm oil. Is one after the other. You have seen a lot. I will just go through. But you know what? To me, what hurts most is not that just the prices went up a lot. Is now they move on a much wider wavelength. Check this out. I measured the yearly high and low, the average between the highest and lowest price every year from 01 until now. Wheat in Minneapolis has grown by 1,643%. The flour price hasn't, right? This is like wild for a wheat miller. Oh, crude oil, okay, 400%. Oh, it feels good, right, when you look at wheat, but not when you are in crude. And then you go on and on. Soybeans, 600%. So the difference on the market's high and lows today is enormous. If you have a futures position, your margin calls can be pretty bad. Fund trends, we work with them, so we talk to them. We try and figure out what is the next, what are you guys up to? The first conclusion we get is there will be increase on the portfolio allocation. The second, they will continue growing their influence. You think they won't? I think it's a very, maybe risky bet. The third thing, they're focusing now on agriculture commodities. In the beginning, most of the indexes were very energy loaded. Now we have a lot of some funds that say, look, I'm going to buy $9 corn calls, and I'm going to go massive on those. I'm going to buy wheat, I'm going to do soybeans, so I will go specifically focusing on a basket of agriculturals. This is a huge change. Good news or bad, it depends on how you face that. Active portfolio management. In the past, they'll go put some money, park on soybeans, just leave it there. Today, not anymore. They will come in and out, keep moving all around, just to trying to maximize the output. They will hold their positions longer. For over 3 years, we heard. In the beginning, it was just let's give an attempt. Right now, it shows proven to be a good investment. And they will continue to diversify their portfolio. You can run, but you cannot hide. Okay, now my next promise. You now are a billionaire. Actually, I'm going to give you $5 billion. Come on, what are you going to buy today? Soybeans. Cool. What else? Palm oil. That's a nice buy. Sugar. Good. But can you think bigger, sir? Can you go more stylish on this stuff? Okay. You can buy 95 Panamaxes. That's a great market. Wow. You can buy 15 Airbus A380s. Let's open an airline. Cool. 1 nuclear power plant. 12 million tons of wheat, 11 million tons of meal, 4.5 million tons of veg oils, and 17 million tons of corn. Wow, I like that. Promise fulfilled, billionaire for a minute. Could have bought all this. Why I'm talking about 5 billion? Well, this is Outer Zone Australia, 2007. How many ships in one picture? 2, 4, 6, 8, 10, 12, 13, 14, right? One picture, Outer Zone. Great, so there was this huge port congestion. Freight prices going to the roof. Ships that were